Welcome back to the Oxford Real Estate Report. Today's episode is one of the most important I've recorded so far. We're grounding this discussion entirely in Oxford home sale data from the past 2 years. I analyzed closed home sales in Oxford from 2024 through 2025. That's over 1,000 transactions, real prices, real days on market, real buyer behavior. And when you step back and look at that data as a whole, it tells a very clear story about where our local market has been, and more importantly, where it's likely going in 2026. If you own a home, are considering selling, or are simply trying to understand the direction of the Oxford market, this episode will give you clarity instead of noise. Let's start with the big picture. From 2024 through 2025, Oxford home prices did rise, but the nature of the market changed in meaningful ways. Median sale prices increased roughly 4 to 5% over that 2-year window. Price per square foot rose even more, closer to 6%. On the surface, that sounds like continued strength, and it was, but those price gains didn't come with the same leverage sellers enjoyed earlier. In 2024, many homes sold at or extremely close to list price. By 2025, that shifted. Sale to list ratios declined. Buyers negotiated more. Price reductions became more common. Deals still closed, but they were earned, not automatic. This is a critical distinction. The Oxford market didn't stall in 2025. It normalized. One telling indicator of this normalization is the sale to list ratio. This metric shows how close homes are selling relative to their original asking price, and it's one of the clearest ways to measure buyer versus seller leverage. In 2024, that ratio hovered close to 99%. In 2025, it dropped closer to the high 97% range. That may sound minor, but across hundreds of transactions, it's a meaningful shift. What this tells us is that buyers became more selective. They were still willing to pay for quality, location, and condition, but they were far less willing to overpay simply because inventory was limited. For sellers, this marked the beginning of a market where pricing accuracy matters more than optimism. Another important trend appeared when we looked at where sales clustered by price range. In 2025, Oxford saw a smaller share of sales under $300,000 and a noticeably larger share of sales in the $750,000 to $1 million range compared to 2024. This doesn't necessarily mean the market suddenly became luxury-driven. Instead, it suggests two things happened at the same time. First, entry-level inventory remained tight. Second, newer or higher-end product made up a larger portion of what actually closed. This shift helped push median prices higher, even as buyers gained leverage. It also reinforces that Oxford is not one single market. It's multiple overlapping markets moving at different speeds. I also found that seasonality still exists, but it's changed. Oxford has always been a seasonal market, and the data confirms that hasn't changed. Late spring and early summer still produce the highest number of closings. That's when liquidity is strongest. However, what changed in 2025 is the relationship between volume and pricing power. In previous years, high volume often meant strong seller leverage. In 2025, some of the busiest months also showed weaker sale to list ratios. Homes sold, but sellers had to be realistic to get deals done. For 2026, this means timing alone won't carry a listing. Strategy matters more than the calendar. So what does all of this mean looking forward into 2026? Based solely on the Oxford data from 2024 and 2025, the most likely scenario for 2026 is flat to modest price growth. A reasonable expectation is 1 to 5% appreciation overall, with price per square foot continuing to edge upward slightly faster than median price. But this growth won't be evenly distributed. Oxford is increasingly a two-speed market. Homes that are well located, well maintained, and properly priced will continue to sell efficiently. Homes that miss on condition, location, or pricing will feel pressure more quickly than they would have just a few years ago. This is not a setup for a crash. It's not a setup for runaway appreciation either. It's a precision market. The data also points to where risk and opportunity are likely to show up for 2026. Risk increases when sellers price based on yesterday's market rather than current buyer behavior. The penalty for overpricing is no longer just a slightly longer days on market number. It increasingly shows up as price reductions and weaker negotiation outcomes. Opportunity exists for sellers who understand this shift early. Homes that are priced correctly from day one still benefit from Oxford's underlying demand. They just don't benefit from automatic momentum anymore. For buyers, 2026 is likely to offer more negotiating room than the last few years, but only in certain segments. Desirable neighborhoods and turnkey homes will still command strong interest. If you're a homeowner thinking about selling in 2026, the data sends a clear message. Don't assume the market will do the work for you. Don't anchor to peak pricing from earlier cycles. And don't rely on seasonality alone to carry a deal. Instead, focus on realistic comps, honest condition assessment, and a pricing strategy that reflects how buyers are actually behaving today, not how they behaved 2 years ago. Homes that do this well will still sell. Homes that don't will feel the market much faster. Lastly, one of the biggest mistakes I see is applying national housing headlines to a local market like Oxford. Oxford has its own drivers, its own buyer mix, its own rhythms, and that's why local transaction data is far more valuable than generalized forecasts. The last 2 years show us a market that is stable, resilient, and increasingly disciplined. That's a healthy market, even if it feels different from the frenzy years. Thank you for listening. If you want weekly data-driven insight into Oxford real estate, make sure you subscribe on YouTube, Apple Podcasts, or Spotify. And if there's a specific neighborhood, price range, or market segment you want broken down next, let me know. I'm happy to dig into the data. I'll see you soon.